What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we had one of the most exciting flat days in stock market history, with some major stocks like Tesla hitting very important critical price targets. So the question from here is, are we going to see a Santa Claus rally? So first up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were up 0.14%, and we had a very exciting flat day because even though SPY did not move much, we did have a lot of individual stock names moving quite a bit, and Tesla stock by far is at the top of that list. So with today's analysis, I want to address the possibility of a Santa Claus rally. And I now think there is a very good chance that we see a Santa Claus rally that should be starting late this week. So for that reason, I'm going to go ahead and draw the Santa Claus rally expectation. And I think we will likely see that rally starting Thursday or Friday of this week and going into the first 2 trading days of January that could take SPY all the way back into the 390s. Now this is mostly just speculation, and I do want you to still manage your risk around this support zone at 378. But as long as SPY is above 378, I do think the sellers are getting exhausted and the bulls are going to start gaining some confidence, which could lead to that Santa Claus rally. The reason I believe this is because we are extremely oversold and we are now continuing to close below the lower Bollinger Band for the 3rd day in a row, and we are just way too far extended below a lot of these moving averages, and I think we are at least due for a dead cat bounce. The dead cat bounce should easily take us up to fill the gap around 387. And if we continue to rally through there and break through the resistance at 390, I will be looking for a retest of the resistance at 393 and the gap fill at 396. Keep in mind, the stock market is independent from everything else and it can do anything it wants to, and it is 100% going to be a technical move. There is no reason trying to justify why the market would rally from here other than 100% technical reasons only. So don't try to cite what the Fed said and don't try to cite what's going on with earnings. This is 100% just reading what the chart is currently telling us. So for that reason, just manage your risk around this risk level at 378, knowing that if we break below that, then we are very likely going to continue into a spiral that could lead to capitulation, that could easily send SPY back down to the 360s, or even retesting the 52-week closing lows in the 350s. We can never rule that out as a possible scenario, but I do think there is a very good chance we are about to get a Santa Claus rally starting late this week into next week. So to the upside, manage your risk around that resistance at 387 and 390, and above 390, the bulls should be on parade to continue pushing higher. On the Nasdaq 100 triple Qs, we were down 0.08% today, and the triple Qs are holding well above that gap fill at 268 and are now below the lower Bollinger Band for the 3rd day in a row, only increasing the probability of that dead cat bounce. Just like I said on SPY, I think this increases the probability we get that Santa Claus rally, and that could take us all the way up to resistance at 280 and the gap fill at 283. So there is reason to believe we could get that Santa Claus rally late this week into next week, and you can see the triple Q's volume is starting to increase with today's price action. Now without a doubt, we are still in a bear trend, so we are still expecting the Santa Claus rally to result in a lower high before we continue into that bear market. So continue to respect the resistance at 280 and the gap fill at 283. The critical downside support to manage your risk is going to be this gap fill zone around 268, because if we break below that, we will retest the 52-week lows at 260. And if we break below 260, we are looking for the next price target down there at 250. In the Dow Jones, we were up 0.31% today, and the Dow Jones is trying to hold this breakout of that resistance trend line and now trying to turn that into support, but still finding resistance at the 50 EMA and strong resistance zone around 330. We have gaps to fill at 330.78 and 337.64. So the Santa Claus rally in the Dow Jones should take us up to fill those gaps. The critical support to manage around in the Dow Jones is still going to be around 325, because if we break below that, we are very likely coming back down to 319.5. On the Russell 2000 IWM ETF, we were up 0.53% today, and the small caps are getting way too oversold and due for a bounce at least back up to 176 to 178, or likely going to fill the gap just below 179. So there is looking more and more likely with these oversold conditions that we could get that Santa Claus rally next week, and you're seeing it across the board in many big tech names as well as the indices. If we break down below the previous closing low at 172, look for the next leg lower down here around 167. On the ARKK ETF, we were down 0.16%, and ARKK continues to close below that resistance at 32.5 and getting very close to our next leg lower at 31.3. Below that, we could still go for the next leg at $30, but as you can tell, the volume is dropping off. So we are definitely seeing a lot less volume in this ETF, even on a breakdown below support. This very likely means retail has given up on this ETF and walked away from it completely because we are just not getting that capitulation on a breakdown below the 52-week low. This is great news for you bulls on the ARK ETF in the long term because it means we are closer to a bottom than a top, which means we could be seeing the end of the ARKK bear market in the very near future once we get a strong bounce off of one of these levels. Look for the confirmation that we're getting more bullish on a break above 34.6 and then the break above 38. On the VIX, we were down 4.19%, and the VIX is either broken or there is just no fear related to this sell-off that we're getting from the VIX, because the VIX is a great indicator of future volatility and fear, and the VIX is absolutely plummeting. So look for the confirmation that the bulls are in full control when the VIX breaks back down below 20, but do keep in mind at any point the VIX could spike all the way back above 24 and we could see volatility returning to this market. On Bitcoin, we're currently up 2.69%, and Bitcoin is trying to bounce off of the lower Bollinger Band, but still finding resistance at the 20 simple moving average at 17,000. Critical resistance remains 17,550 and critical support remains 16,000. If we break support at 16,000, our next leg lower will be 14,395. On Amazon stock, we were up 0.32% today, and Amazon got the second day in a row closing below the 52-week low at 86, so that level is now going to be resistance. If we get rejected from 86, our next leg lower will be $80 and then 77. But you can see from the Bollinger Bands, we do need time for those bands to expand to allow us to go any lower. On a break above 86, you can use that level as support for a run up, possibly back up towards 91. And we're not getting bullish until we can get a break back over resistance at 97. On Microsoft stock, we were up 0.56%, coming back up to critical resistance at 242 and failing to close above that level. A rejection from here should allow the Bollinger Bands to expand as we head back down to fill the gap around 228. You can get a lot more bullish if we can break above 242 and hold that level as support for at least a retest of the resistance around 248 to 252. And you need to stay risk off while we are below this resistance at 242. On Nvidia stock, we were down 1.04%, and Nvidia is still heading lower, and we are getting very oversold at these levels as we're coming into the critical support at 156. If we break below 156, we're going to see full-blown capitulation as we waterfall down to fill the gap at 142. But if we can bounce off of 156, we can come back up towards this resistance at 167. And on a break above that resistance, we can go fill the gap at 174. On Tesla stock, we were down 8.05% today, and we finally hit the double top price target at 138, and we have just a little bit lower to go to completely fill the daily gap at 137.48. As you can tell from the arrow, we did arrive at the price target a day late, but we have clearly arrived at the price target, which means we can now delete this arrow because this double top price target has been satisfied. So for that reason, I think this only increases the probability that we do get that Santa Claus rally. And I do think the Santa Claus rally could be very nice to Tesla buyers, because I think there is a good chance we can run all the way back up to 197, or at a very minimum, at least retest the neckline around 168. So on Tesla stock, we've had very high volume selling capitulation, which is no surprise because this is a retail favorite. And I think there's a lot of retailers that have now been shaken out of this stock, and their diamond hands have been proven to be paper. So if you have been panic selling Tesla, you may regret it because these are levels that a lot of people have been waiting to buy. And I do think you are going to start seeing a lot of buying pressure in this stock. If I'm wrong, we should easily slice down below 137 and start down towards 130. But I do believe there's a very good chance Tesla is about to go on a face-ripping rally. Watch the upside resistance at 155 and the neckline at 168. And if we could break above that neckline, we should have a very easy shot back up towards 197. On Apple stock, we were down 0.05% today, and Apple is still extremely oversold below the lower Bollinger Band for the fourth day in a row and getting a very strong bounce off of that support at 130. Now it's important that I zoom out here because you see that 130 is going to be our 52-week low back from June. So if we break down below 130, we are very likely going to start seeing capitulation in Apple stock. I don't think now is the time to see that capitulation, but you can never completely rule it out. So for that reason, Apple is a very critical support at 130, which means you can stay bullish on Apple as long as it's above 130. Below 130, you're looking for high volume selling, which means you don't want any part of that as a bull. So you need to set your risk at 130 and you can stay bullish as long as support is holding up. Resistance levels will be 133 and 135, and if we break above 135, look for a trip all the way back up to 141. On the financials, we were up 0.42% today, as the financials are very likely getting that dead cat bounce from being oversold and could start back up to fill the gap around 34.5. The industrials were up 0.12% today, holding support at the 50 EMA and critical gap fill of support at 97. The healthcare sector was down 0.02% today, holding that critical support at 134 and still has a gap to fill at 137. The energy sector was up 1.5% today, holding support at 84, but overall still in a bear trend. So if we lose support at 84, we're looking for that next leg lower at $80. So jumping back over to the S&P 500, without a doubt, I think there is a very good chance that we are going to get a Santa Claus rally, but it's not going to start until late this week, and it should take us all the way through next week. So if you're still shorting this market, keep in mind the odds are going against you the more oversold we get. So consider locking in your bear profits and even consider start getting a lot more bullish above critical support, because I do think there is a very good chance we are going to see a rally from here. You'll know instantly if we're wrong because we'll break down through the support and then you can take your losses and expect lower prices. But I still think the odds are in the favor of the bulls that we start to rally from here. So manage your risk and plan accordingly and prepare for a Santa Claus rally. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.